Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site, we have Dave Weisberger. He's the CEO of CoinRoutes. We're going to take a look at digital assets. It's a question of when, not if at this point. Dave, it's great to have you back with me as always, and we've spoken about this a number of times. It's our favorite subject as of now. Digital assets, it's changing the world, allowing access to capital.
First of all, thank you for having me back. It's funny, I said the same thing last year when the markets were going crazy to the upside. At the end of last year, when the markets were in the midst or the grip of crypto winter and as it was getting washed out. And I'll say it again, the reality is that it is inevitable in my mind that all capital markets will eventually go digital. Now, it will take a lot of time and there is lots of entrenched interest, but the reality is that there's too many things that make sense. It makes much more sense for the same asset to be able to be traded on the same platform against multiple currencies or multiple assets like Bitcoin or other cryptos as well. That just makes it way easier. It makes much more sense for global investors to be able to trade against other global investors on global platforms rather than having national platforms. Now, obviously the regulators don't really like this, but outside of the US regulators, they're not stopping it. So it really is the kind of thing that will eventually gain traction. Right. Now, there's also debates about whether we will ever see a non-sovereign store of value, such as Bitcoin, gain global prominence. I personally think the answer is yes. There's lots of potential for the answer to be no. The reality is that the notion of mathematically derived, impossible to manipulate in the sense of its core value, not in the sense of its trading, assets has intuitive appeal for many people around the world. Perhaps not in a country like the United States where we have a currency that is the world's reserve currency that people can trust and operate upon. But we take for granted how important that trust is. Right. And that is a very important consideration.
And one of the challenges that we have as it stands right now is the challenge of fragmentation. As you had mentioned before, it's just all over the place.
Well, I mean, it's fragmentation in two different ways, really. I mean, there's fragmentation in knowledge of how markets operate, and it's fragmentation in the market itself. There are many people in the crypto sphere, and I say this at CoinRoutes all the time. It's crazy. But when people ask me, what's your single biggest competitor? And my single biggest competitor is foolishness. And they say, what do you mean? I say, well, it's because most of the large investors or most of the large holders of Bitcoin and crypto are totally price insensitive. They're far more worried about security. They're far more worried about who they know. They're far more worried about being distributed in the sense of an end goal than they are about maximizing their returns. Right. And that's actually the way it is, but it looks a lot like the way equity investors were, basically before the electronic revolution happened in the 80s. Right. And so we see a lot of that.
Well, part of the issue is too, based on what you're saying, is accurate reporting. That's a big issue.
There's been a couple of really cool reports that came out. So Bitwise did CoinRoutes a huge favor, and I talked with the people at Bitwise about this. I love the fact that they pointed out that there's a ton of 95%, according to them, of fake volume out there. And I don't know if it's 95% fake or 90 or 80 or whatever, but there's a lot of fake volume. There's a lot of exchanges that don't surveil against wash sales. So you can't know whether or not people are printing, volume that really isn't real. There's also a lot of exchanges with quotes that you can't necessarily access because they're limited to certain people or not available to these investors or that investors. So what we do is we give people flexible pricing sources. So we've created two patent pending methodologies. One that essentially lets you filter for which exchanges you think are real and get prices there and have size filters. And another which does similar but also takes fees and size for individual orders into account. And that way you could always know. So one of the things I talk about often is the Bitcoin ETF, right? And the SEC says, well, it's fragmented. We don't know where the price of Bitcoin is. To that I would say horse, etc. It's, this is on video. I'll try to be more genteel. But the fact is I can put a real-time feed on anybody's screen that says, here's the cost to buy $3.5 million worth of Bitcoin right now with fees from the standpoint of a US investor. So that from all exchanges that have MTLs or other regulatory approvals and that surveil against wash sales, etc., etc. Now, I can do that. You cannot do that for FX. There was actually a big story in the FT over the weekend about how manipulated and opaque the FX market is. We have plenty of ETFs on the basis of FX, yet Bitcoin arguably is a more transparent, at least if you have our technology, but a more transparent market than the FX market is, and yet we don't have an ETF approved. Yeah. I understand the why. The why is because the SEC looks at the way Bitcoin trades and says, why isn't there best execution? Why don't exchanges care about that sort of thing? And that's a real concern. but it's getting to the point where you really don't understand why investors are being forced to pay premiums by buying into funds or do other backward sorts of things to get the same exposure they want.
But what about the regulatory update here? Has any progress been made there? I mean, why not just implement a system like yours that's washing out all these outliers?
Well, I mean, certainly the private industry is doing it. We're not the only ones that have systems like that. There are others, but look, some of the regulators get it. I mean, I talked with one of the SEC commissioners, other than Crypto Mom, who obviously has been very outspoken on this, and they get the joke. It's getting increasingly difficult to ignore the fact that Bitcoin in particular has outperformed all the other asset classes that it's uncorrelated to, and the SEC has made it harder or more expensive for the average investor to invest. Now, is that a flash in the pan again? Well, you can make up your own mind, but I think there's certainly a growing realization that something needs to give here, and it's a problem. The other big problem, and I was down in DC recently, and I said this to both a congressman who's a co-signatory to the Token Taxonomy Act and to an SEC commissioner. I said, listen, my company, we are forming an overseas entity. In fact, our investors want us to form an entity overseas, and frankly, we need to, because by September, we won't be able to have accounts if we're not overseas to trade on Binance, which is a very important crypto exchange. And we have plenty of customers outside the US that will want to trade on Binance, and so we need to be able to support that. Even if it's not an investment business, we have to do so. That's really sad, because we are at risk in the United States of falling behind in the digital asset markets due to what could arguably be called over-paternalistic regulation. I mean, it's not that it's badly intended. I think the SEC does a phenomenal job of protecting investors, and that is their primary charter. But don't forget, FX and commodities and even futures, the CFTC and those regulators, they're more concerned with markets being fair and operating correctly than in protecting investors. If you lose money, well, that's not really what they care about. So we have this sort of issue where the SEC wants to protect investors from themselves. And so we have all these laws that really have been outdated. I mean, think of it this way. Today, if you want to know whether a restaurant is good, if you want to know whether a product is good, you get reviews from hundreds, if not thousands of people. And it's really hard to scam people with products for very long.
Right.
In finance, that is also true. You could tap into the knowledge of the crowds, and you can make it such that it's harder to scam. Where it's easy to scam is when things are private. The more public and transparent they get, the harder it is to scam people. Sure, people can get sucked in. There's no two ways about it. Greed and fear will always rule markets, and you'll have bubbles and collapses. But think about where we are. We have not one shred of regulation that has been built in an era that understands the power of the internet, that understands the power of social media, that understands even the power of computers. And so clearly it's time for an overhaul. And unfortunately, when you use old regulations for new technologies, you end up with some bad results.
But then you also, you have to think about where the underlying technology, blockchain, and where cryptocurrency was evolved from. It's kind of been that decentralized frame of mind.
Sure.
You and I have spoken about this before. Does it have to be that black and white? Perhaps some redundancies can be centralized, and things that are a little bit more private and internal don't have to be.
Oh, absolutely. I mean, the whole notion that being decentralized is always good is ridiculous. Price discovery, by its nature, and in fact, the entire debate about Reg NMS back in the day was all about order competition. What that means is the buyers and the sellers, you want to maximize their interaction, even if one is in Malaysia and the other is in Dubuque. It doesn't matter. So the ability to create centralization of data, centralization of order books, even if those are virtual order books, such as we do at CoinRoutes, that's beyond good. It's necessary. And so yes, there are certain aspects of decentralization that are really important, that allow for censorship resistance, that allow for freedom. There's all sorts of reasons behind it. But price discovery is in its essence a central function, even if that centralization is virtual. It doesn't mean you have to custody on one exchange, but it does mean you need to bring all this stuff together. And so that is a different world, and that's a world that neither the regulatory side nor the original blockchain people really had in mind, but it is what's coming together, and it is the way the market's evolving.
All right, Dave, thank you so much for joining me. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.